Let's talk about your broker. Now, most people pick a broker on a whim like they pick a takeaway on a high street. Why? It's the closest and cheapest. Bad idea. Might get food poisoning. But the broker itself will quietly rob you. A bit like her if she gets my wallet. She robbed me quicker than you can blink. Trust me, you lie, you cow. She does it all the time, right? But how do they rob you? Well, they rob you with the spreads, the slippage, poor execution of trade. So what we're going to do is we're going to have a bit chat about brokers today, what you should look for, and how actually a broker can be a hindrance to you as well as a godsend. So just be careful who you part your money with.
So this time next year we'll be millionaires.
So we're going to start with the spreads. But what is the spread? Well, you might have a sell price at 9 and a buy price at 11, and there's a gap between the two. What's that gap? That's the spread. That's what the broker gets for facilitating the trade. Now, they also get paid commissions and swaps in the round trip, etc. But they will look at the spread. Now, if you're looking at brokers and they've got an ECN, something like what BlackBull does, you have direct market access of sorts, and the spreads will be down to 0 because you are straight to the liquidity provider. And we'll touch on that a bit more later on. But more often than not, when you're on the majors, something like Eurodollar, it's 0.6. But you could have a broker sort of over in the Cayman Islands or something, which isn't quite regulated, and they might have 2 for the same asset. Well, if you're a scalper and you're doing 10 or 20 trades a day, that 2 spread, it all adds up. And then across a month, well, it becomes a reasonable chunk of change that will definitely eat into your profits. And I know a lot of people don't look at this sort of thing. It's like looking at the T's and C's of a contract. You know it's there, but you just don't pay any attention to it.
Just a little bit.
But what they do pay attention to is leverage. Now, if you're in Europe, you're under ESMA rules. It's kind of capped at 1 in 30, 1 in 6, depending on the asset. And they do change from time to time, but that's roughly what it is at the time of the video. But on the likes of BlackBull that I use, it has 500 to 1 leverage. It's pretty high. Now, again, you can get high. You can get up to 2,000 to 1 leverage. But it is a double-edged sword. It's a double-edged sword because people always think, oh, I can get a position size on, that's massive. I'm really going to explode my size.
I have the power!
Well, that's foolhardy because it's okay putting 2 lots on if you've only got 500 quid. How long do you think that account will last? It's amazing if it goes for you out the gate, but even if you're right on the trade, because you've oversized due to leverage, it will eliminate the account and get a margin call straight away. So what you use leverage for is to open the asset. So if you want to trade the Dow, it's very expensive. You haven't got very much in your account. You can size minimum using the leverage. That's the best thing to look for.
Who'd be stupid enough to do that?
Justify, stupid.
So you've had a look at spreads, you've had a look at leverage. But what does that mean? Well, it means you can open up an asset and you know roughly what the costs are going to be. Now, with the BlackBull, like what I use, it's got a multitude of assets. Now, again, you can look at some in the Cayman Islands and they'll only give you a limited amount. There might only be Forex. Well, what if you want to trade a commodity? Well, you can't. So therefore, you'll have to have another broker for the commodity. What if you want to trade indices or stocks? You can't. Now, with my broker, and I do use 2, I'm more gravitating to BlackBull because of the platform, and I'll touch on that, to align itself to the prop. And I also use IG because of the web trade. But they've both got huge amounts of assets to trade. Take BlackBull as an example, it's got 26,000 assets. So if I want to trade indices, I can. If I want to trade Forex, I can. I don't have to mix and match. Now, when it comes to the platform, that's where, again, you want to be paying attention to. Now, you want choice. You might like TradingView. Make certain that it can connect to TradingView. Otherwise, you'll do an analysis on TradingView and try and execute on MT5. but never the twain will meet. So you might have your analysis slightly out of whack. You want to trade on the platform you're going to use. Now, I do a lot with prop, or at least I used to, and they are predominantly MT5. Well, make certain you've got MT5 as your platform of choice. So not only have you got a multitude of assets to choose from, make certain your platform's correct, and then you can put it together with your prop.
Twins, Basil, twins.
And when you're using platforms, you'll often blame the platform for a technical error that is beyond the platform's fault. All it's there for is to execute a trade. Now, the execution comes from the broker and what feeds they have. Now, again, BlackBull, you can use an ECN, direct access. You're straight through to liquidity provider and you're missing out the dealing desk. So it's lightning fast, you know. Even on a standard account, it's pretty much instantaneous execution. Now, this is wonderful because it minimizes slippage. And slippage is something nobody ever talks about. Now, if you get positive slippage, everybody loves that.
I'd buy that for $1.
You know, oh, I was going to get a tenner out the market and the price just screamed through and I got 12. Fantastic. But what about when it goes the other way?
You piles of shit!
Then it's the broker's fault. Or it's the platform's not very good and I hate that platform. I'm going to use a different platform. No. If you look at the broker beforehand, you'll see what their execution times are. And you want them lightning fast because slippage can be an issue. Now, for an unregulated company, this is where all these stories of stop hunting and everything come from, because nobody's tracking them. Nobody's really accountable. Now, something like sort of IG, which is under a London license, the New Zealand license for BlackBull is rock solid. In fact, it's stricter than what's in London because it's also part of the money laundering scenario they have over there. And it is as strict as hell. Now, it sounds awful, but it's actually a great thing because it protects you. So when you're looking at slippage and all of these different bits and pieces, make certain you know what the history behind the company is.
Do your research.
So what's the moral of the story here? Well, it's all about doing your due diligence. You know, look at the broker that will suit your needs. Now, that can be, I'm a scalper, I'm doing loads of trades, bing, bang, boo. So you need very, very tight spreads. You know, 0.6 euro dollar, fantastic. 3, not so much. You know, she doesn't understand spread. She just thinks, I want that, I'll have it. Isn't that right?
It is right, actually.
Yeah, no, it is. She couldn't give a toss about what the cost is.
I do, actually.
Really?
Sometimes.
I was going to say, if I can hide it well. Right? So that would be an issue, the cost of business. Then you want the execution of business because you don't want to give the profits away in slippage and things like that. You certainly don't want to be using the leverage to increase the position size.
Boy, that escalated quickly. I mean, that really got out of hand fast.
What you need the leverage for is to open up an asset, but that's where the assets come in. You need to know that they're doing it anyway. So if you want to trade commodities, Forex and indices and shares, make certain it's a one-stop shop so it's all together. And then also marry up your platforms. So if you are a prop trader and you've got a prop on the side, make certain that whatever the props platform is equal in your broker. And that way you're training your eyes all the time to the same thing. So you're used to the order executions the same. You're used to the way it looks and it feels natural. Because there's nothing worse than open up a new platform, might know how to trade, but the order execution might be a bit weird and you don't understand it. They might have different terminology, you know, bid and offer pricing and all of this sort of thing, or pound per point. Well, if you're used to trading in lots, it can screw your mind a little bit. So ensure that they match up. But ultimately, you work with something that suits you. Now for me, BlackBull ticks all of my boxes. It's also got the MT5, which marries over into the fivers, and that's it. And it started off as a secondary broker to me, but over time, it's starting to become more and more a main broker because of cost. It is actually really cheap to operate. Its spreads are pin tight, and that's all I'm looking for. So speed of execution, guarantee of payouts, and then am I happy with it? Simple as that. So if you're stuck, I'm very easy found. You get my contact details on the website, scruffytrader.com. And as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.